Hey guys, Tony Benson here with Wealth Builders HQ and creator of Patterns in a Flash. We're going to review of the couple patterns that we had last week, the patterns of the week, and have a little fun. Look at what else is still on the radar. But before we get there, I'm not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So last week we looked at a pennant on ARRY and a double top on Tesla. So let's jump right to it, and I think we're on the ARRY already. We are. Let me jump back historically. You can see that nice little pop that we've had. Not a real expensive stock, only $20. It's also not that old when it comes to publicly traded, at least. I'm not sure how old the company is. Keep in mind that most companies start long before they go public, right? So, and it's hard to say. I've seen companies that have been around for 20, 30, 40 years before they launch public, and other ones that basically launch and then within weeks or months they're on the public market. So it varies all over the board. So this is a technology company, so they probably ran for a few years, grew really quickly, and then went public. So typically that's what a lot of tech companies do. But none of that really matters. We look at charts, at least here. I mean, some people look at fundamentals and all that other stuff. Don't care about it. I'm short-term trading. I want to be in and out as fast as possible. And what we've got here is what we had before we dipped down a little bit is a nice little pennant pattern. And pennant patterns and flag patterns rarely produce reversals. If you've been inside Patterns and Flash, if you use that tool, and if you watch the videos about these particular patterns and what we look for with them, you'd realize that. You'd know that they don't often create reversals. Mainly because there's so much momentum in this move, right? You got this big flagpole. So we did dip, though. Let me get the candles here. We did dip and break below it, actually, the day after, or the day of. I don't remember if that vertical line is the day I highlighted it or not. Either way, we had a little dip below, and now we're back up kind of in that little range. So I'm still not opposed to it. If this thing would take off to the upside, then I'd maybe look at trading this. And I know this doesn't look like a lot. It's 23, let's just call it 24 to 27. That's 3 points. But, excuse me, sorry about that. 3 points on a $23 stock is what, 12, 13%, 14%? So even though it may not look big, that's a pretty good move. And if you're trading options, generically speaking, if you're trading options, you're getting about, for every 1% move in the stock, you get about a 10% move in the option. You get about a 10 to 1 leverage on options. Again, depends on which ones you buy, and there's a lot of different factors, but generically speaking, that's about what you get. So with a 10 or 12 or 14% move in the stock, you should get about 100 to 120, 150% rate of return on your option. So don't let the little moves fool you. That's the beauty of options. You get pretty significant leverage, and if it moves the way you think it's going to, you can make a lot of money really fast. Okay? But that's also a double-edged sword. Leverage is a double-edged sword. It's really, really good when things are going the right direction, but leverage is really, really bad if it's going against you, right? That's why you have to use stops. You have to mitigate risk. You have to do things to make sure that if you are highly leveraged, you've got to make sure and protect yourself just in case things go haywire, right? Moving on to Tesla, and I think, I don't know where all my lines went. I just realized that a couple minutes ago, and I think when they split, I'm guessing that's where all my lines went. I don't know. If I unadjust it, does it? Nope. Oh, interesting. That must be a programming thing. So on Omega charts, which is what I use for my daily charting, right? If you hit U, it unadjusts it for the split. And here we unadjusted for the split, and it made everything disappear. That's weird. I wonder. Oh, there we go. Okay. So yeah, you see when I hit U for unadjust? So here's adjusted for the split, right? So the stock's at 300. Yesterday, the stock was at 900. Now, if you're looking at an unadjusted chart, you're looking at Tesla going, what happened to Tesla? It got cut by 60%. No, they did a 3-for-1 split. So the price adjusted. So that's not an actual drop, right? But that actually, I think, is. Or did they split back then? No, they split back then, too. Interesting. I forgot about that. But Tesla's not one of those that I've really followed a lot. I mean, a lot of people love this thing, and I love Elon Musk now. I didn't really know much about him. In the last year, I've learned a lot about him, and there's a lot of things I like about the guy. So... But we have a double top. We still have a double top in play. And interestingly enough, as you saw the pennant, we kind of have a little bit of one of those going here. It's not, you notice the flagpole's not nearly as straight. It's not as straight up like it was on ARRY, right? And you could realistically put a little line on here and say, well, yeah, that's pushing it a little bit to me. I wouldn't call it a flag or a pennant. Of course, if it broke above this level, this 309 level, then I would be bullish up to about 350. Because you've got the downtrend coming in. I think that comes in about 350. I'm pretty certain I deleted my lines. I could have sworn I had these lines all on here. Excuse me again. So if Tesla breaks north, then I'd be bullish up to there. But I'd be looking for a double top for breaks this midpoint here at 282. So we shall see. They just did a split. We'll see how the overall market. Powell's going to speak in a little bit. Let's take a brief look at these other ones. Abbott, this is another one that's a longer-term play. I mean, I got to go to weekly chart. There's a head and shoulders, but looking for this thing to drop to about 90, preferably over the next month or two. At least that's what I'm hoping for, because that's the positions I have. CTSH is still kind of on the radar. If it pops back up, we have an inverted head and shoulders that's still in play. Probably going to take a week or two to get back up here, so that'll probably come off the radar next week, especially if it rolls back over. IRT, this is another one, longer-term downward play, big head and shoulders, right? Looking for about 16. Not a real expensive stock, but again, $21 to 17, that's 4 points on a $20 stock, a little more than 4. That's a 20% move. So even if that takes 6 months to do, if you have a little bit longer-term portfolio, if you have, space to do some longer-term positions, maybe you pick up a longer-term put on this thing for 6, 8, 9 months out. And if it drops, you're looking at, probably a couple 100% rate of return. J&J, this is what I'm watching today. It's actually pretty close to that level at this point. Nice descending triangle. Broke in a big way with heavy volume. And then it bounced back up, and it's kind of dancing around that level. So I'm watching that one closely. And then Nioh, the last one, still kind of hit and miss on this. This is another electric car. And I did just learn something about these guys. It's interesting, but if it pops back to the upside, gets back above that $20 level and stays above there for a little bit, or at least gives some kind of bullish indication, then I'd be interested in upside. And again, $21 to 25, $26 with the possibility of maybe really bolting to the upside. So this has the potential to be a big home run. I don't have a lot of faith in big bullish moves, and especially stocks like this in this market. But you never know, right? And so sometimes it's good to get in and you scale out. If you get in at, say, 21.28 and it runs to 24, because you can see a little resistance there, I'd be looking at scaling back some of it. I'd take part of my profits on it. And if it started to hesitate, I'd take it all or put a tight stop on it. And then leave some of it there. If it keeps going, if it runs up to 25.50, if it still has momentum, I'd clear out maybe some more of it, maybe a third of it here, then a third of it here. And then if it really takes off and runs, then you have a third of a position there. Now you're getting a home run out of it, right? So just a thought. There's a million different ways to trade. That's the beauty of trading. There is no right or wrong answer. And there's a lot of different ways to go about it. And everybody has their opinion about it. And I tell people, look, do what works for you. Some people use certain technical indicators. Rob loves fib. A lot of our students love fibs. We've got one gentleman that's in Patterns in a Flash, and he'll do fib analysis, and I'll go do my analysis like you see here. And our end conclusion is usually really, really similar, if not the same. So don't get stuck and hung up on, what do I have to use? I have to do this. There is no right or wrong answer. There are certain basics, there are certain core things that are important. But outside of that, a lot of it's subjective. And like I said, use what works for you. Okay? I do what works for me. I've learned over 22 years to keep it simple. Don't overcomplicate it. It doesn't need to be. And just go with the flow. So with that, I'm going to sign off. And just remember, trading's tough. It is one of the most difficult things you will ever attempt to succeed at. And in my opinion, the only way you ever fail is to throw in the towel and to bail. Because you're going to have good days, you're going to have bad days. You're going to have good weeks and bad weeks, good months, good years, bad years. It's part of the drill. It's part of the way it goes. The only way you ever fail, in my opinion, is if you quit. And that's why there's where this came from. Because one thing I am very terrible at is quitting. I've always been a failure when it comes to quitting. So if you're going to fail at just one thing, fail at quitting. Take care. God bless.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire. which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I've put together just for you.